Testing 1 2, testing 1 2. Oh, that went out to the stream. Sorry, guys. We're going to get rolling here in just a moment. Got a few people that are making their way into the other stream over here. And we'll see if anybody is available to head into the YouTube live stream here as well. And then we're going to get rolling. Okay, let's go ahead and bring the music down here. And let's get this show on the road. Hello and welcome to Landy's Crypto Corner. Today is Market Madness Technical Analysis Wednesdays, and this is a live stream. I am recording this for later consumption for those of you that usually cannot make it to the times that I stream. We're going to take a look at Bitcoin today. We'll take a look at maybe some alts, and we'll check out traditional markets. We do have a CPI print coming in tomorrow, so some positioning prior to CPI is likely what we're seeing now as Bitcoin hangs out on the daily support area after this reclaim in yesterday's candle. So we had a closure come in at around 29,770 with the wick high there coming in just shy of that weekly overhead resistance here in the 30,200 area. Now we are seeing a pretty sharp pullback in the lower term timeframes off of that area and the upper second standard deviation. Bitcoin has lost that upper first, so unless it can regain that by the end of today, I would be looking for it to test some more in and around this daily support area in the 29.4 to 5 area and around that basis band, which is coming in at just around 29.4. If it does lose that area, pay attention to the lower first here. And let's go ahead and increase the size of this arrow so it's a little bit more visible. Now the lower second is coming in at just over $29,000. If this area is lost by the bulls, I do think the bears take things right back to the lows here around the lower second standard deviation, which is now coming in at 28. We'll call it 28.8, which is kind of where it's been right around this wick low that was defining the low side of the closing range here And if the bulls are going to turn this into a deviation, they really do need to remain above this wick low and the basis. Otherwise, it is going to end up right back down here. And if it does drop the lower second, I do think the bears will take control and bring it right back to this wick low at this daily support at around that 28.4 to 5 and open up that weekly target just below at 28K. And to be honest, if that area is lost, I do think we're looking at a pretty big drawdown to the 27.5 area, 27.250 at these dailies, and then that 26.750 to 27K area. Now, that's not a given. We would have to see how price reacts down here at the lows if it did get there. And as it stands right now, Bitcoin still does have a chance to hold this daily support that it's sitting on right now. We'll see how realistic that becomes as the day goes on and into tomorrow's CPI print. Now, when evaluating the daily Stoke here, this is still headed up. And we'll cut over to this chart real quick. I think I'm running the same Stokes here. Give me just a moment. I'll show you guys. This is the KVDB Stoke. You can get that over at app.crowntrading.net if you'd like to get a paid version of a Stoke, or you can get a free one that also has pivots here, the BA reverse Stoke panel. And they both have the same Stoke pivots. The KVDB one is just a lot more information built in there, such as DMI, ADX, volatility, and a few other things. So in this case, Stoke will cross back down on any closures on the daily below $29,065. And of course, that would be below this lower second standard deviation. So if we did see closures below there, I would expect to run back to that wick low and possibly lower, as we just discussed. Now, if Bitcoin does choose to hold on to this support and make its way back above the upper first standard deviation of the Bollinger Bands here around that 29.7 and take out this high side structure on a close again, or sit above there at around that 29.7 close open over here, then I would be looking for it to retest that upper second standard deviation around $30,000 and above and try to turn the Bollinger Bands back to a more neutral stance, as they are pointed to the downside here, and then give a real attempt up to that weekly overhead resistance at 30,300 or so. And if it does get above there, I would raise my targets pretty significantly. When I'm talking significantly, I'm going to give you the blow by blow upside areas that I'm interested in, and that's going to be around 30,500 to 600, 30,800 around this high on a close, to the wick high area that was kind of governing this entire top side here at around $31,000. If Bitcoin can clear that area, then I'd be looking for it to test right back up to 31.8 and then that 32.4 level, or and possibly that 32.4 level over top if it can get above that wick high. And then we reevaluate for further possible upside. As it stands right now, it's pretty neutral. It is a positive that it regained the low side structures here, but a swing of this close open here at around that 29,800 with the closing wick highs coming in, the wick high coming in at 30,350 and the close here, is at $30,081. So swinging this area right here and then rejecting, while not abnormal after losing this range, is not a strong sign. You do want to see that recovered if you are bullish on this, to go and head up and take out that last wick high. We have recovered the close open over here at that 29, that's 29.7 or so in yesterday's close, which closed above by about $70. And we have swung the wick high here at 30,000, and it does need to close above there. And that's going to be right around that close over here as well. So we need to see this area at this wick and this close open structure closed above. Then we'd see a legit shot at that 30,300. and possibly more over time. But for right now, it's just kind of hanging out. And it's, as long as it is not getting above there and starting to close any significant time frames either below the daily or the daily itself, then it's really about what areas does it hold to the downside here. So that basis in the daily support 29.4 to 5 is going to be the preferred area for the bulls. Otherwise, the bears have the ability to just take it right back to the low side structure. It's not a death sentence either, by the way. Just got to watch it. If that 29K lower first can hold to that lower second around that wick low at around 28.8. Of course, if that area is dropped, there's still another chance down at the daily support at 28.4 to 5, and we just evaluate from there. So that's going to be kind of the daily outlook for Bitcoin here. Not seeing anything too crazy. We do see that BBWP is headed up now, has not confirmed over the moving average. If it does, I would still give it a little bit of room. We got to see Bitcoin at minimum. This is the preferred setup for the way that the bands are positioned and when looking at BBWP, because we are seeing a slight bit of expansion of BBWP. It's barely anything right now. It's just building. Now, rejecting off the upper second and third area around an overhead resistance zone would indicate that if it does run back down here, lose the lower first and second area, that it would get expansion to the downside. That's actually how this would be read. But if Bitcoin can at least maintain that lower first on a close and or above the basis area in the strong half of the bands, turn this around a bit, start closing back above the upper first and second, and getting BBWP and the moving average pointed up, it is possible that we could start to see closures above the upper second that would confirm our expansion or more aggressive expansion into these areas, giving it a better shot to take out these overhead resistance areas. And we did have a 2-day bit of a reversal structure here. Now this is not a bullish engulfing of the entire area, but it did take out many of the candles here and then closed above this consolidation on a close open basis. So being back above the lower first is advantageous, but rejecting initial first pass rejection at the basis is to be expected. You want to see it hold the area that it just broke out from. And of course, not much happening until it closes above 30K again. And that would also be above the basis to go test, of course, again, that weekly overhead resistance. Upper first is 30,500. That does cut across these highs on the 2-day over here, which is, kind of averaged out at about 30,500. The high here on a close is around 30,700. That's also one of the reasons why I'm looking in those areas. If the weekly does get reclaimed above one of those daily areas, kind of zone by zone. So back below the lower second, we have very low BBWP. That would imply, if it didn't reverse from that area again at around 28.4 to 5, that things are likely to head down to the weekly at 28K, and that would definitely open up the possibilities for further downside. But as it stands right now, when looking at momentum on the 2-day, we can see that it is crossed to the upside here on any closures above 28.882, so 28.9, right around that 29K area on the daily that I've been pointing out at the lower first. So it's definitely a big area of interest if we do see price pull back further from here. And that is going to be closing with Friday's candle. So, right? Or that will be closed on Friday. Tomorrow is going to be Thursday. Yeah, it'll be closing with Friday's candle. And that's going to be a big one to watch for, because coming off the oversold zone, turned up, still in the bearish control zone. So something to keep an eye on where this pivot updates to. And as I had suspected when I last spoken with you, if we did see it set in a low here, which technically it has a low, but it's trapped in a wider range. It's a low within this 30,000 to 28.5 area, but the 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 low side structure is where the pivot has moved to. So if it loses around 29K, I do expect that to turn back down, and we're looking for a little bit more downside. Now, that is also going to play into the 3-day as well, which did lose and the basis and close below it. And the 3-day does have a few different interesting setups going on here. If it can regain the basis, which that's a pretty strong rejection on the current 3-day, but this is going to close with the 2-day on Friday as well. The next big area on the 3-day would be 28,100. That most likely will end up around this low side structure. As you can see, the compression here on the bands, very low BBWP. It is starting to kick up a little bit here, around 1% over 0.6%. Now that is that's pretty much not a signal yet. And we can see that it's been very low volatility for a while. So this is a very, I would say that this is going to be a pretty sizable move. I don't think this is going to be something that just kind of goes sideways and melts up or down. I do think that there's going to be some faster moves coming up. Now, I do want to note that as we do head into that Friday closure this week, the pivot on momentum is at 30,783. So basically 30,800 on the 3-day. That would turn it back to the upside. And if it does head to the downside, a fairly fast move down to the lower first where the 200s are coming in as well is fair game. And the 200s are coming in just under that $28,000 level at the lower first at around 27,700 to 800. So that is just above the daily supports there at 27.5 to 27,250. Wick through it is not abnormal either to hit some of those areas. Even 27K is fair game. But I did want to call this out. The lower second standard deviation is right on that weekly, and I can show you on the chart that's marked up for the Bitcoin in 60 seconds videos. If you look at the weekly down here, this is the one that I have been calling out, that 26,750 weekly. That is this little bit of a low side structure here from the drawdown. So zoom out a bit. You can see back here, we had the move up. We had a little bit of a sideways consolidation, didn't really put in a high. Came down, made a low structure. This candle at the end of May actually formed, closing above this doji, did create a low, but then that low was met by a lower high almost immediately. But that is an area of interest around that 26,750. So when looking at that 3-day setup on the Bollinger Bands, if things were to head over there, it would be, that's not the 3-day, that's the 3-hour, my bad. We can kind of see how the 3 days lining up with everything is it's all in very important areas as I struggle to find my words here. Lower second is right at that weekly. I do suspect that by Friday it's going to be most likely above on another closure if Bitcoin isn't already down in these areas. And then the lower third I do suspect will be around that 25 to 20, that it's currently at around 25,300. I would expect it to move up to around 26K or so, maybe slightly under it. Lower first is probably going to move up in a little bit further in this daily support zone as well if Bitcoin is not trading down towards it by that time. So a few things to watch out for with these time frames above the daily and below the weekly. So our medium term time frames on below the weekly here, and that is kind of where I want to leave things for right now. I know we did have a 5-day closure. We might as well look at it. The basis band has been tested, and that is still around 28.5. Not much has changed. It's just going sideways. So the same analysis that I had from Monday is going to apply here as well. Upper first is at the overhead weekly resistance at 30,300. Lower first is right there at that weekly support at 26,750, slightly above it at around 26,8 to 9. So break above the upper first, we're probably going to run the highs. Break below the lower first, we're probably going to run this low area, maybe even down to that 24.8 to 25.3 zone down here at the lows. So just keep that in mind, as that would be a very big move that would be the very big move either way that I'm looking for from the daily, 2-day, 3-day perspective. So that would get nice expansion of volatility and the Bollinger Bands. So, we're starting to see the etchings of expansion. Nothing is confirmed yet. Moving average and BBWP need to be pointed to the upside, and the important areas on the bands need to be closed above. At this point, we'll start to see continued expansion on any closures above the upper first or lower first, and then the aggressive expansion would begin above the upper second or lower second. And again, because there is so much overhead resistance and underside support here, with all of the structure over here, and then now the structure that was just built over the past couple of weeks up top, it's very likely that we could just see things, see it keep reversing from these areas. But that's where we then look to where is it closing on the 2-day, 3-day time frames, reference that weekly, above the upper first, below the lower first. And that will help us with the longer term direction. That's going to do it for Bitcoin right now. Let's see. Well, I didn't record, so I'm going to have to pull the... I'm going to have to pull this from the actual stream. I'll have to just download the video and chop this part out for you guys. But for those of you watching this after the fact, thank you for joining me. Go ahead and leave a like. And if you're not subscribed, please go ahead and subscribe. I do daily videos in the shorts section. So you can see the Bitcoin in 60 seconds with updated targets every day. And then I am streaming Monday, Wednesday, and Friday. So hope to see you there. Thank you so much for joining me. Okay, so for those of you here in the live stream, that's going to be kind of, that'll be a video that goes up later. And just kind of with my thoughts on the longer term analysis, basically for Friday. Let me go ahead and jump into the chats here. I'm not really watching them too much right now. Okay, hello, no name. No names here. Jedi's here. Ivan, Baba, Don, hello. Hi, everybody. That's over in YouTube land. And then for you guys over in the Parsec share, if you have questions, because you guys are rotating over there, some of you might be a little bit newer. Go ahead and leave the questions in. There's a question box. You can actually go ahead and leave them there. Because you guys are chatting amongst yourself, I already lost your questions. So if you have any questions, go ahead and leave them there if I didn't already answer them. For those of you over in YouTube, if you have questions, please go ahead and get them into the chat now, and I'll scroll back up through them when we get towards the end of the stream here, and get ready to take maybe a few requests today. There's not going to be as many. I do have to... school started, so I do have to go pick up my son. And we'll go from there. So let's go ahead and actually check on a few other things, see how the market's doing. Let's check on the next biggest guy here, and that would be ETH. ETH on the daily, doing the same thing as Bitcoin. It's trying to set a low. This is considered, this is a swing fail that was confirmed in yesterday's candle, but it's rejecting around the wick high, so it could just swing fail that area, swing fail to the top side, and then head right back down. that's kind of where I'm at with Bitcoin as well when looking at this. So yeah, the basis is this wick high of this area that it's swinging. We have a swing fail. If it can break out and close above this wick high at 1857 to 1860, I'd look for it to go back and try to reclaim that upper first, which is around this high side structure up here. Let me make that more visual. I've been messing with a lot of different stuff here. My apologies. Let's go ahead and 2 pixel that. All right, so we got a zone here. You want to see, bulls want to see closures above that basis band. That will break it out of this area, confirm the entire low here. But that still would not do much if it cannot push past 1857 here. 1876, sorry, 1857 is right where it's at the basis or so. And that would be that other line of resistance over here. Kind of matches up with the area that it lost and retested, and that's around 1886. Realistically, it's got to start getting above that upper second around the 1890 to 1895 area, and then I do think it's got a fair shot of heading up to the 19 to 1950 area. So it's trying, man. It's trying. Stokes pointed to the upside here. And volatility is low as it came back to the basis. So this was, a reversal off the lower second area at the lows around support, and then mean revert back to the basis. If it's going to be bearish, it's going to reject around the areas that it's rejecting around, which is the upper first to the upper second, and then head back down to that lower first, lower second area. And then we look for confirmed expansion below the lower second and the low here, which is coming in at, what is this? This is going to be 1800. So, and these are areas that we've talked about for a little while when looking at ETH as well. So we'll just have to come back and check on it on Friday and see where it's at. We will definitely, you'll definitely get a heads up in the Bitcoin in 60 seconds video tomorrow after the CPI print after close. When I do release that video, we'll have a little bit clearer picture, most likely, of direction here, and that would apply to ETH and most alts in my opinion. 2 days looking to turn up for ETH. What is that going to be? That's going to be on the 2-day. Yeah, we did talk about this. It's the 2-day 200 as well. 1833. So if it can close above 1833 on Friday, then I would be looking for this to, if it does have downside, probably back into the low side structure around this 200, around 1800, maybe a little lower, into the upper 17s, but it's not looking like it has a lot of juice or follow through at this low side structure just yet. We'd have to evaluate it there, probably looking at it getting a bounce from there again and then reevaluate it. But the daily headed up on closures above 1816. That was that big area that if it had lost, it was going to go down and test around 1800, high 1700 area, and it did. And 2-day could possibly turn up. Doesn't mean it's not going to fail, but being in these critical zones and turning up when you're running a 6-3 Stoke, which is generally accepted as crypto optimized. Close over close momentum. I would be looking for this to have, if it did get a rundown, probably a rundown right back into support, and then more volatile bounce back up, and then we reevaluate. From the 2-day perspective, it is going to be this this area above the basis at around 1888. That would be our 1890 to 1895. So that matches what I was just talking about when looking at the daily. So that's going to be ETH for right now. Let's go check on traditional markets, see what's going on. We've been pretty much doing exactly what I had explained on the daily here. It can come down to the basis, lower first, even lower second on the daily, and for Dow here, and no real big issues. Lower first is still within this high side range that was a reclaim, but it can even come all the way down to the lower second, which is around the highs of this breakout and retest on the daily here. And that's coming in at that 34,515 area. And if it is going to head down there, realistically, it can even dive deeper. But realistically, above the 200s here, I'm not that concerned about Dow longer term. And that's coming in all the way down there at 33,650 or so, 33,584 to 33,650 or so. And yes, that would be a really big drawdown, no doubt. But above there, I'm not really looking for anything too crazy. I would expect pretty volatile bounces off of the lower standard deviations of the Bollinger Bands down into the 200s, wherever they are, if it does pull back to those areas. And then we reevaluate. Now, yes, there is a market structure change here on the daily, but hanging out above that basis for right now is fine. And it can even get down to that lower first, lower second. I have no problem with that. Lower first is coming in at 34,850 right now. I do expect that to come up to around 34,900, maybe even 35,000. The lower second is racing up, and it's now at 34,500. So I would expect that to maybe make it above some of the local wicks here pretty soon here at around that 34,600 area. So something to keep an eye on. If it does regain the upper first on the other side of this to the upside, if it can regain the upper first, even not upper thirst, but upper first, then we're looking at 35,530 or so as it stands right now. Then I would be looking right back to the highs into this resistance area around that 35,600 to 35,650. If it can break out above, I would keep an eye on that upper second at around 35,800 to 850. And the main reason why I say that is this is around another high over here. There's another few daily highs over here, but I suspect it's going to start building some bigger divergences. We would have to see, it would probably be a first pass rejection, and then we'd have to come back to it later. I would suspect, you can see BBWP is pretty low, so there's a bigger move baking here on Dow, and it's playing out one drive of bearish divergence, and we did not get a follow-up drive, so I would just be aware of where bearish divergence would come in on the other side of that. So definitely something to keep an eye on. This is going to most likely lose this bit of meme trendline regression on Stoke. Not a big deal. It's already, it's already got that lower first above the support area, and it's likely that the lower second is going to be above there as well. So if we did see continuation to the downside, a break of that trend line, that trend line regression on there, then I would be just looking down here. That's if it does not regain this basis and head up, which is at 35,188, 190 area, probably going to update to around 35,195, maybe even 35,2 in the next close. We'll just come back to that on Friday and see how the Friday closes post CPI data. When looking at NASDAQ, we're looking at lower second. This is quite a bit deeper in the momentum area. So 15,265 would turn this back up. It's about 100 points below that right now, and it is starting to enter the bearish control zone. You can see that, or I'm sorry, the oversold zone in the bearish control area. And you can see that it kind of plays around in here depending on what's going on with equities as well. And we'll look at those in just a moment. But reversals off the lower second are pretty common. If it does break below here at 15,143, I would expect it to come down to these supports, and that would be 1,500 or 15,000 rather, and maybe slightly under at that 14,900 to 14,700, and it could even swing all the way down to this low. I don't really, we have a market structure change. You got lower lows, lower highs now. So, we have a low, lower high, lower low. I would realistically be looking for if it reverses around this lower second, lower third area above the support, if it makes another lower high. That's what I would be interested to see. As it stands right now, pullbacks are fine. It's when it does bounce, where does it bounce to, and can it maintain its bounce and take out a lower high, or can it bounce, make another lower high, bounce again, and then take out that lower high? That's really what we're going to be looking for in terms of structure. Sometimes, we do see it just come right back and take out the next area, but this is kind of what I'm looking for, a little bit of a drawdown into the basis. In this case, we had the lower high, higher low, higher high, and now we have another, low, higher low, higher low, lower high, lower low. So again, you can kind of see how it was just in this really aggressive uptrend. Comes up, makes the higher low, lower high, and then higher low, and then comes right back and takes out this last lower high. That's kind of what I'd be looking for here. If it does start to bounce in this area above that 1,500, we can call it 14,700 to 14,700 to 15,000. That's what I would be looking for. And regain and turn that momentum pivot. You can see there's a lot of bearish divergence here. So, and in fact, bullish control, it lost the midline here, which is 15,355 or 335, 15,335. If it could head back up that way, that would turn the momentum pivot. But still, I think it would take a little bit of work for it to get continuation to the upside. The bearish control zone down here is coming in at 14,700, go figure. So bearish control zone, or the edge of the bearish control zone, is this support right here at around 14,700. When looking at SPY, seeing the same thing as on NASDAQ. So pull back into the lower second. These are your typical reversal zones, lower second to lower third. And we've got, the market structure change. But again, this actually came down, made a higher low, higher high on a close, stayed inside the wick though on a close over here. Higher low, took it out, and then now we've reversed market structure. It's really messy. And the way that it opened and closed here, that's where futures are going to be a lot cleaner to look at. But, a move back down, swing of this doji low. If it does close below the lower second, I would expect it to come a little bit further down to around 440 to 442, and then possibly open up the 435 to 440 area just below this low over here. That would be the next area if it cannot reverse off the lower second. If it can close above the lower first here at 448, 450, I'd look for it to run right back to this overhead resistance that it just deviated around that 452 to 455 area, just above the basis, to that upper first area. And we are seeing a pretty quick reset of momentum here. It's just about, does it get continuation below that lower second? 450 would turn this back up at close of day today, and it's about 4 to 5 points away, which I do think would be not an insignificant move from here. So realistically, look for that lower first to get regained, and then gauge how it reacts to the basis. That's what I'm going to be looking for as we head into Friday. and especially during CPI tomorrow. So, and on the 2-day, we're settling right in on the basis band. If it is lost, again, that lower first is coming in at 438. So that's that 435 to 440 area down there, right around that low. I'm opening up the 435 because of this open over here and this close right here. Back above the upper first on the 2-day, that's again same area around 452, 453. Same area as the upper first on the daily, right? That was the upper first, right? Basis band on the daily, it's right around the same area. So the basis band on the daily is slightly below the upper first on the 2-day. So if it can regain that and the 2-day, this overhead resistance, fair game. If it can regain that, it's right back to the highs around the upper second standard deviation of the 2-day. And that would be around your 455 to 460 area. If it does lose the basis and lower first, well, look at that. Lower seconds coming in right at that support down here at around that 430 area. So, it's not, it does not look like it immediately wants to take off, but this is, it could get some momentum divergence if it sets a low as well. This last low on the 2-day was pretty darn far away. Low side structures were all the way down in the 400 to 415 area. So wherever the 2-day does turn, it's going to get some nice momentum divergence on the other side of all those bearish divergences that it's been building up here. And it's likely it would, get some more bearish divergence, to be quite honest, if it makes some higher highs here. And if it did, I would be looking for it to eventually run its all-time high. We can see the 2-day is also getting its 200s crossing over. So the EMA is what you want to see crossing over that SMA. And that's down in that area at the 405 to 415 zone, sitting there at 411 right now, and that will update on Friday. Just curious, where is that is also where, right around where the 200 simple moving averages on the daily and the EMAs, about 10 points above that, coming in at just shy of 419 instead of 409 here. Don't really have a strong opinion. I know there's a lot of people very, very bearish on traditional markets right now. It's rejecting, it's going to fall, sky's falling, it's all over, market's going to completely collapse, fall apart, right? Until we actually see the clear signs of that happening, overall in the longer term time frames, maybe not the daily, weekly, on the longer term time frames, it does favor more upside towards that all-time high as it stands right now. Got to see some key areas on the monthly breakdown, specifically closures below 440 that can also get below the basis band down there on the monthly. That would solidify this. Closures on the monthly below 437 would, paint a top here, but it's really not until it starts breaching that basis band at around 413 would I be even looking anywhere around the low side structure. It's more of a retest of the high side of the lows here. And if it did really aggressively pull back, that lower first is a pretty good area to reverse. Then you've got, your low, lower high, higher low, and then try to take out this lower high. As it stands right now, I'm not seeing the signs that I would want to see to even be looking in any of these areas, but just theoretically, as it is the big talking point right now, that's 387 to 390. I'd probably put this around 400 points at the close of this monthly candle. So we'll see. We'll see how close I am with the bull bands. And let's go take a look at Dixie. And we'll look at gold last here. So Dixie is, it's got an initial rejection around its current local high. And it never actually did lock that high in, did it? Let's go ahead and get a little bit cleaner picture of this. So did it lock in that high? No, it did not. Technically, it's got a 3 candle high here, but like I said, unless it's going to close below 101.95, which was the open of the August 2nd candle. I'm not really looking for it to pull back much further into these highs down here, into this high, I should say, not these, but this high, which is coming in at 101.64 on a wick and a 101.42 on a close, right around that basis band at which is probably going to update to this closing structure around 101.42 to 150, 101.50 area. Now, because it did not put in that that breakdown below that open, it wicked it, it reversed, and it's come up and swung the highs here. So if it does paint a bear hammer here on the daily by close today, if it does lose that upper first, then I'd be looking right back to that 102 area. So the upper first is at 102.28. Currently, it's trading at 102.50. If it does lose that upper first and the 102 and takes out that 101.96 area, then I would be looking for a drawdown to the mid 101s to the lower side of the 101s around the close open structure here and the basis band. If it does lose that, it's right back down to about $100, right around 101 to 180, 100.80, I should say, and possibly that low side structure here at 155 cents. So that's going to be my take on Dixie for price action as it relates to the Bollinger Bands. We do see that the momentum pivots 102.62, trading a little bit under that at 102.50, 49 now. So this is likely to get a cross back, or it continue with its cross down. It's trying to cross back up, but not necessarily confirmed. We'll just have to check on this on Friday, see where it's at. Obviously, we'll know with the closures on the daily what's going on there as well. 2 days pivoted at that 101.15, so this number actually went down slightly. And that would be below on the 2 day. That would be below basically this order block candle, which is open, or the close was at 101.03 and the open was at 101.42. So area to watch to the downside would be this order block candle. And then there is an order block candle right here at the 200 EMA that Dixie is trying to reclaim on the 2 day to go and swing that upper first around the deeper 102 area at 102.90. Did it get there? Just fell short at 102.84. So be aware of that. So it's pressure up on the 2 day. Pressure is shifting on the daily, but not quite down, as I would call it right now. And in fact, the 12 hour is looking like it could complete this cross back to the upside on any closures that above that 102.32. So that's something to watch for. That would indicate that it's probably going to hang on the highs here, maybe try a little bit higher soon. It's higher low, higher high structure as it stands right now. There is a bit of you could make a case that this is a lower high, but it's not yet. It's not confirmed on the 12 hour here. And if it regains the 200, you might see an aggressive spike up into that upper second. It almost looks as though it could hang around here, especially if it can stick above 102 on the 12 hour. But it starts to lose that area, then just like the daily, look into the same areas to the downside. 101.5 to low 101 area. Gold, we've got it hitting all the areas that I've been talking about. So gold on the daily headed down and aggressively so. Currently below the lowest second here at that 1916. Gonna probably head down and swing these lows around the 200s here, which is coming in at 1908 and 1900 respectively. So I'd be looking for this to probably continue to those areas, maybe even if it's just on a wick. Closing below 1920 here on the daily would further that case. So more likely that it would head down to those areas and pick up volatility expansion on the Bollinger Bands. It's at 32, 33 or so, and it is confirmed up over the moving average. So, mean reversion back to the 200s here. It could even swing under them and swing the lows down here at just under 1900 in the upper 1800 area, and then I'd watch it because it might get a nice bounce in those areas. If it doesn't try to bounce, above them. And yeah, we'll check up on the longer term time frames. Yeah, the 2-day. If it does close, this is going to be an extended move, most likely into those lows at around 1900, low 1800, or upper 1800 area, where the lower second is coming in, is what I was trying to say there. And looking good. Actually, that's a nice pullback, as I've been actually shorting gold. So we'll see. I've been taking profit in this area, and maybe there's one more spike down that I can ride down. It's just a matter of how long it takes is going to dictate how long I hold that trade. So that's going to be gold. And that's pretty much going to wrap my thoughts for today on most of these items. So I am going to jump over into the chats here. We're going to turn up the music and have a little bit of conversation time here. Just give me a moment to get the chats up here. Let's see. And let's go ahead and turn the music up a little bit. So we got a little bit of background here. Forgive me, I'm going to actually, you might hear me as I turn this on because I want to be able to hear how loud the music is in relation to my own voice. If you have questions, go ahead and put them in the chat. I'm going to read up the chats here. I do see some questions coming in over there. And I do see a few here in YouTube. But if you have anything specific that you'd like to ask me, go ahead and get it in there on the YouTube side of things. Okay, music and voice balance sounds okay. You let me know if it's not for you guys out there, and I will adjust it. As it stands right now, we're in the Q&A portion of the stream here, and let me go ahead and check over here. I'm going to check YouTube first, guys. As normal, some of you guys have very specific questions that probably not something I can answer on stream, so and that would be in the other chat over here for Parsec. Some of them I can, and then others I'll just have to answer probably off stream for you. They're a little specific to your use case. For you guys over here, let's see. We've got check the RSI and the weekly for Bitcoin. Sure. Is there something specific that you would like to know about the RSI? Baba? It's still in the strong half of the RSI. Could potentially see if it can close the candle green this week. We could potentially see it around the signal line here, which is at 29.43 or so, which it has dropped now. So we are seeing Bitcoin head down to some of the areas that I have talked about. It's dropped the support. Let's go over here. While we were talking, it did drop the daily support zone, and it is at the basis band on the daily. So if there is something specific that you'd like to know about or that you wanted me to look at on RSI here, there's no real There's like no divergences. There's nothing really of interest right now. You know, it's at a 57 read. You know, a lot of people make a big deal about like the read of where RSI is, and I'm going to tell you right now, that's not the relevant part. The relevant part is where's their divergences, you know, and where are the classic zones of support and resistance for RSI reads. You know, around 60 to 62 is your edge of your bearish control zone, and that's edge of the bullish control zone, and that's going to be around, you know, 30,800 to 31k or so. It might even be 6 to 800 because this is a 62, so the 60 read would probably be 30,600, and a 62 reads coming at 30,000, almost 900. So probably got like a $300 zone where price action would be at around 30,600 to 800 at the edge of the bullish control zone at about a 60 to 62 read. You know, the 50 read on the RSI or the midline is coming in at that 27,800. It's a 2-day, 3-day area. And then bearish control zone on the weekly is all the way down here at 20,800 to $21,000 or so. So that's kind of where, you know, there's not much interesting going on here. I mean, there's going to be a lot of bearish divergence in the long run from, you know, the highs of the bull run. But as it stands right now, I mean, we've already seen this weekly bear div pretty much play out. You know, because we've had the drawdown, and now we've already experienced a drawdown, which is a mean reversion back to the basis area on the weekly. So I would say that bearish divergence between the last two weekly highs has pretty much played out. That's at least your first target has played out, which is a mean reversion play. So it did mean revert. And then the secondary targets would be, you know, somewhere around the high side of this low structure or swinging this last low, which is, you know, anywhere between 24,300 to $27,000. Big zone there. You could even take the 200s here, which are kind of lining up with the lower first and second. Lower first is where the 200 EMA is coming in, kind of that 27,200 to 27,350 or so. Lower second's coming in at where that 200 EMA is coming in, and that's around 25.5 to 25.8 basically. So it's all in, we see things all in major areas. Like second downside areas would be, those are your secondary downside targets. It's already hit the first downside targets based off that kind of that type of a bear div, higher high, lower high, because it was a higher high on a close, lower high on RSI. So, and nothing on the other side of it just yet. So there's no bullish divergence here or anything that I'm seeing, unless I'm just missing something. But if you did have a specific question about it, go ahead and ask. Or if you just want to know my thoughts, that's kind of what I think about it. There is a secondary target, and it's basically the last lows on the weekly. And we've hit the primary downside target already. Weekly momentum would turn up on any closures above 30,600 to 650 or so. So that is something to note if Bitcoin can pull itself up by the bootstraps here as it bounces around the daily support. And since January this year, go above 58, it's coming back down. Yeah, it's you're making too much of it, I think. If you're gonna analyze it in that manner, what you really want to look for is not the read itself. Like I was saying, you want to look at where are we getting divergences? Like, are we seeing weakness? Are we seeing strength? That's really what you want to look for. Like a lot of guys in the crypto markets, a lot of guys even in traditional markets make a big deal of the number itself, and it doesn't matter. It matters where it is in relation to your scale midline, your bullish control zones, and your bearish control zones. And then its biggest the biggest advantage to using an RSI, for instance, is going to be evaluating your bullish and bearish divergences. That's really what's going to knock it out of the park for you. As for, price momentum, I'm not seeing anything too abnormal on the weekly for RSI. It's in similar levels. It's above the signal line on the, or it's below the signal line. It was above the signal line. Not really seeing much other than that. I do know that you're drawing the correlation from where we were kind of around. If you're measuring it as support, I wouldn't necessarily measure it as support, but if that is one of your strategies, you can do that, but it's what advantage is it giving you is really what you need to evaluate. And I do believe that historically speaking and technically speaking, the divergences are where your advantages lie. Let's see. How am I? I'm fine. I'm doing fine. Oh, you're probably referring to my injured hand. Yeah, I'll be fine. No biggie. So let's see what else here. Now for the guys over in the other chat, for traditional markets, I did get a question over here for Apple. Okay, see you later, babe. Apple, yeah, Apple did draw down. So we had a drawdown to the basis here. This was a beautiful short, and that's on the weekly time frame. Is that what you wanted me to look at? Apple on the weekly. Okay, yeah. Oh, we might as well look at the daily as well. So Apple had a nice pullback. This was a nice run off the lows here. From a weekly perspective, this kind of a retest is perfectly fine. All the way down to the lower first and even lower second. As long as it's above this last high here at about 157.38, 158 or so, this was its breakout area. It had rejected from here initially, and then got a higher low in the weekly, and then kind of blasted off past this high side structure here at 182. Now it's back to test these highs, and it can test all the way to this last high of this particular move up with no problems on the weekly. And if it does fall apart, it's going to be below the lower second, and that would be concerning. It would have one last chance around the 382 of this move, which is at 152.50 basically. And it's still in this high side structure, so it would have the ability to go all the way down there. I would expect some pretty nice daily bounces from those areas if it did get there, even around the lower second standard deviation of the Bollinger Bands. And if it's going to, it's about where does it bounce and fail at that point, right? This is a pretty extended run to the upside. Just mean reverting back to the basis, no biggie. And that means we do need to go look at the daily, because what's the daily doing? Daily is, pretty extended to the downside. It's probably got some more time on the lows here, if I had to guess, based on the BBWP read. It can come down basically 170 around the 618 and the daily 200 EMA. It could still make its way down there. Still fine. I'd be looking for bounces and then reevaluate. I'd be looking for any kind of closures that can get back above the lower second standard deviation now, which as it currently stands is around 179.20. And then I'd be looking to the 786 here at 182 and the lower first, because if it's going to maintain trend to the downside from here, this thing can actually bounce all the way back to the upper first and still maintain a downtrending posture. But realistically, it's going to be lower first to the basis on any bounces from here. And that, I don't think it's not necessarily ready. It just closed below the lower second standard deviation. When this opens up tomorrow, I think it's got a little bit more time to the downside here. Looking at Stoke, the pivots at 186, probably going to keep heading down, into the low 180s, but pressure is on to the downside if it does drop basically yesterday's wick low at 177. Then I would be looking for things to head down a little bit further into possibly that 169, nice, basically 170 area, and then evaluate from there. Could hit just under there at around where the 200's coming in, but above the 200 simple moving average on the daily, which is coming in at the 50% of the move, which is 161. I'm not looking for like doom and gloom on it, to be honest. What did it do on earnings? Did it beat earnings? It did. Yeah, they revised down though, didn't they? I haven't been keeping track, so you'd have to let me know. Did they revise down and then beat earnings? They got a dividend payment tomorrow, so I wonder if it. I'm sorry, they have dividends on Friday. So I wonder if we see what we see on Friday. No, if you. Yeah. That's. We got to see how things react by Friday. We'll probably see, either the etchings of continuation or probably a bounce by then, Friday into Monday or something like that, and then reevaluate. Yeah, it's on the 200s on the 4-hour. BBWP is starting to cool down, 98 under 99, so the volatility is under the moving average right now. So just so you guys know that who I've talked to about mainly crypto, stocks play very, very technically with fibs and typically with the bands, even more so, I should say, than the Bollinger Band volatility relationship along with fibs in traditional markets is a killer setup, even more so than in crypto. I've experienced much higher hit rates. Bitcoin's great for it, really high hit rates there, but it's a little bit dicier when you start getting into the altcoins. You got to use more support and resistance zones, more swing fail patterns when you're getting into those altcoins. Yeah, around the 200s here, we could be seeing this set up for a bounce Thursday into Friday, which might be an early indication that if it does start to bounce, that CPI may not be as well. We would have to look because this thing as it stands right now, it's got to change structure and it can still fail around the basis and all that stuff. But we might see a bounce during CPI if that's the case. So just keep an eye on it. I've got a few more traditional market things here. You can see that my list is pretty small here. So, you guys just want the regular stuff anyway? You want Microsoft? Is there something going on with them outside of this, which is a drawdown on the 4-hour and the daily? Ooh, this is ugly. That's ugly. That's top for a little while. Same thing. Everything's kind of ugly right now in tech, it seems. After a really nice run up, now it's a run down back to that. Excuse me, back to that lower second area at 318. Fair game. Did close below the low over here. It is trying to regain it post market at 322.50. That could be a post-market retest. Maybe it's a swing and low or a deviation. It is around this high, so it does have a bit of room where the wick came in at 321.18. So it's either going to drop below 320 and hit that lower second, which is going to be probably, when this opens back up, probably more towards like 315 area. And if it does start to really lose those areas, then we're looking down to 313. in and around that 310 to 313, and then you got to watch this low and this low over here, right? So this low with these highs around 310 to 313, and then you got to watch this low down here at 303, or else it's, it's more than likely going to end up on the 200 EMA down here at around 300 points. $300, sorry. Yeah, bounce back above 323. I mean, it could deviate this low side support area that has been bouncing off of. Get everybody on a closure. It's really gonna. We'll see what the market thinks of CPI data tomorrow. That's kind of where I'm at on it. We'll see if it's kind of a lackluster response to CME in terms of volatility. We'll find out, right? 4 hour on it's really, this is aggressive. So we've seen little bounces in between, drawdown to the 200s. It makes sense. That's going to fall right in line most likely with the daily lower second there at 315 to 320. So that's that's kind of where I stand on it. It's kind of beat up, but here's the thing. This closes below the lower second. It's actually going to pick up volatility again. So what you're looking for is 4 hour closes back above that lower first, around 325, and then that's going to put you above that daily pivot as well. And then looking for where this heads to the upside, puts in a high. That's really what it's going to be about. Hourly is ugly. It's got an initial cross down as the close came in. Oh, no. It will cross down on any closes below 321. I do suspect that's going to be right around where price is anyway. And this is indicating a move to around 320. I would be careful. Around this low, drops it at 321.05 and does not pick it up in the lower term time frames below the hourly. And it's likely to head down to that 315 to 318. Yep. Back above 325 again on the basis, then you can watch out for a little bit of a gap fill around that 328 to 330. And on the hourly, anything below the 200s here is going to be fairly bearish, and that's all the way up at 334 to 338. Yeah, and that's you have a band set up here for potential rejection there anyway, at least first pass, and then come back to it later. So, and for you guys over in YouTube land, do you guys have any requests before I go here? They have a few more requests over here, but they're kind of deep in the weeds, and things that I don't think are going to be relevant to many of the people who are here on YouTube. Here on the YouTube stream, I should say. Look at that M for market maker, man. Trying to get a little bounce off of this area here. Yeah, Bitcoin losing the area that it needs to hold. Maybe a little deviation in here on this low. It's going to be interesting to watch here. I'm going to mark this just for now, and that's at 324. So 29,325 basically. Let's go over here. Let's turn on volume. What do you want me to tell you about Bitcoin dominance? What do you want me to tell you about it? It's the amount of the market cap is in Bitcoin. So it's the amount of money from the total crypto market cap is in Bitcoin. The percentage. It looks like, yeah, so we had the little continuation candle here, the high volume continuation candle. That was this guy here, so closes below this and the bounce wick here. Realistically, we're going to see a little bit of a drawdown further. So we did get continuation after this highest volume bear candle here. We're seeing a higher volume bull candle on this doji here. And if it does close this next 15-minute candle above, it's likely going to go test 29.5 or so. Still, I mean, this thing's got can come all the way back to the 28.6, 28.4 to 6 area. Is there any, what percentage should Bitcoin be? I don't know. It's whatever percentage it's going to be, not what I want it to be. And when you're looking at Bitcoin dominance, so you're fairly new to these concepts, I'm assuming. When you're looking at like the total market cap is 1.13 trillion, you have the dominance of Bitcoin and ETH and all these other coins are just the percentage of that market cap that they are. I mean, Bitcoin is half the market cap for crypto as it's totaled up right now. It's, you know, it's still got a nice bounce on the daily. Did it hit the areas that we were talking about? It did. But yeah, there's no like it should be this or that. There's no like hard percentage that it should be. Can it go very high? Yes. What does that mean? When Bitcoin dominance is very high, then the majority of liquidity is going into Bitcoin and usually away from altcoins, unless the market total, the market cap in total is growing. Otherwise, you know, it's going to be hanging around. Don't you think it should be 75% if it's the flagship crypto? No, it doesn't have to be. There's thousands and thousands and thousands of cryptocurrencies competing for capital or liquidity in these markets. I mean, can it get to 75%? Absolutely. And then alts are wrecked in most cases until new money comes in. As it stands right now, I mean, $1 trillion crypto market cap is, you know, most of it's, you know, half of that is locked up in Bitcoin. And then when you're looking at, you know, the total too, which is excluding Bitcoins, including stables, you know, it's at 564 billion, right? So the other half is in stables and altcoins. There's nothing wrong with that. When Bitcoin dominance dips very low, it's typically alts are doing very well versus their Bitcoin pairs. And that's usually referred to as alt season. At least it has been since, you know, alts have started to enter the market and compete for market cap, for liquidity. But yeah, I mean, there's no like hard number, and it's going to change over time. More and more cryptos are going to be created over time, and they are going to sap liquidity away from Bitcoin, and Bitcoin will in turn sap it right back, especially if there's an ETF. I mean, you're going to see market cap of Bitcoin take off like crazy, so its dominance number is going to go up like crazy. But other than that, like, and alts will follow. The whole market will grow, but Bitcoin will just be gaining more of that liquidity coming into the market than alts when Bitcoin dominance is higher or headed up. There's no like hard number, and that number is going to change over time. So yeah, if you're new to these markets, it takes a while to catch up and study. You just have to really study. So if you when you have a question about something like dominance, one of the first things that you want to do is like, okay, if you're seeing it around and you're seeing people talk about it, and then you really need to dig into that subject to learn about what it actually is and how it works and how it interplays with the rest of the market. That way, when you do have questions in the future, you have very targeted questions for what it is that you are looking for in that number. Because a generalized question like, it's the flagship, do I think it should be at 75%? I mean, that's just that's not really technical analysis. That's more of a like, what do I think it should be? Doesn't mean it's going to be that way. Could it hit 75%? Sure. Maybe an ETF does it. A bunch of liquidity ends up flowing into Bitcoin. The entire market cap would grow for crypto in general, so the total market cap would grow, and a lot of money would be flowing into Bitcoin. So I mean, it could reach those levels. That doesn't necessarily mean that alts are going to get crushed. They could also follow. No, there's no such thing as a dumb question. I'm trying to guide you to where you can, when you have questions like that, what you want to do is you want to understand what it is that you're looking at. So in Bitcoin dominance, you want to understand what it is, and that way you can ask a question about Bitcoin dominance that is relative to something in your trading, right? Because me saying that, okay, yeah, I can get to 75%, sure, 80% even, but how is that going to help you? What does that mean? Is Bitcoin going up or down in terms of price? What does that really entail? That's what you gotta, that's where study those portions of the market and learn about each one of these things, like total market cap and dominance within that total market cap, so that you can kind of visualize a plan, so that when you have a question about it, it's more poignant to a way that you might trade, right? Now, you can't trade the Bitcoin dominance chart, but typically Bitcoin dominance goes up when Bitcoin is in a bigger move. That is both to the upside and the downside. When you see Bitcoin dominance headed down pretty aggressively, that's money usually flowing from Bitcoin out to altcoins, and they will do better than their Bitcoin pairings will start going up. When Bitcoin rises and its market cap is growing, then typically alts will also grow, but Bitcoin will usually be the leader there, especially when it's first. It's going to be the first mover in most cases. Not always. There might be alts that are going to move faster. It's much easier to move an alt with a very small market cap. But no, there's no such thing as a dumb question in any education. But one of the things that you want to do, because I can tell that you're new to this, is you want to study what these things are, because then you know what it is that you want to get out of an answer to that question, is what I'm getting at. Yeah, Jimmy, you bouncing? Okay. So Jimmy's gonna head out. Those questions will stay in the Parsec chat over there. So I will, or the message area. Yeah. And then I'm gonna address those other ones with you guys later. So any other questions from the YouTube side of things? I'm probably gonna head out of here, and then I will be talking to you guys in the Bitcoin in 60 seconds videos later, but let me know. So let's see, where are we at? This was the highest volume candle, right? Yeah, there's a highest volume bull candle. Let's go ahead and mark the highest volume bear candle while I wait for you guys to catch up. That was this doji here. So we got a little bit of a zone. Closures below the wick low at 29,350 or so are gonna go down. Yeah, I mean, it's the times are a little bit different right now, Ivan. So what's up, JR? Yeah. So I would tell you, based on swing fail areas, closing below this guy here and its wick low in the next candle, once we saw closes below there. So we had the high volume candle here. It was this guy here that came in at 29.4 495, and then there was a wick low. Once that area is lost, you get continuation to the downside, right? So once that wick low of that candle that set the higher volume is lost, because the next candle wasn't continuation, it was a bounce, and now we have the same thing. So if we do see closures below the wick low of this higher volume candle, then we'd be looking for continuation, probably down into 29,300, maybe a little bit lower. Bounces that reclaim this higher volume candle, likely to go up and test the 200s at 29.5 to 29.550. If it can regain that by close today, I'd be looking for things to kind of hang out while everyone waits for CPI data. Maybe we'll see some volatility this time. Last time it wasn't very volatile, but maybe this time it will be. It's a big M. So you got everybody going, it's market makers here, bring it back to 29K, and then 28.45, and then 28, and then 0. Everything's 0. Crypto's dead. No, I'm just kidding. It's not going away. No such thing. It's not going to die. I'm seeing a lot of that narrative too. Tether is fake. It's all printed money. I'm like, man, wow. It's not backed by anything. You need to get out into USDs, man. Like, okay. Well, yes, there's a case to be made for Tether to die and severely damage the markets for, probably a while. But complaining about that and then going, get out to USDs is kind of silly too. And with a little Landy rant there. All right, you guys have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all of that being said, Landy out.